Investment of your first sum of money in stock market is a very significant step and very important decision for your future wealth creation. In recent surveys, only 12% of population of Ireland own stocks of companies. This is more than 30% in UK. And you compare USA, in most recent survey, it says more than 50% of the population owns stocks. And in India, it's only less than 2% of population hold stocks of companies. So there is a significant difference in different countries where people invest in stocks. Stock market all over the world growing in an exponential rate, and investing in stock market is the most effective way to create wealth for an average people who earns money by means of employment. Why I'm saying first $1,000 or €1,000 is it's not a very significant amount of money, and anyone who has a job can easily find a saving of $1,000 or €1,000. If you're a person who is not getting $1,000 or €1,000 in a couple of months, if you cannot save this kind of money in a reasonable like a couple of months time, you need to fix that first. You need to find a job. That's your first goal to achieve, to find a job in which you can save a decent amount of money. And if you think is this €1,000 or $1,000 is very low amount of money or very insignificant amount of money from your background, you can increase this money, or you can make a calculation and you can find money appropriate to your circumstances. It can be €5,000 or €10,000 if you are well able to invest those kind of amounts. The most important thing is you participate in stock market, not the amount you invest. It's the most important thing is you make sure you participate in stock market and educate yourself about stock market and how you safely invest in stock market. So your first investment in stock market is the amount that you can lose. So you invest the least amount you can forget, or you can lose the whole amount is the amount you should invest in stock market first. So your first goal is to learn how to invest safely in stock market. So the amount doesn't matter. If it's above $1,000, it is a good amount of money to start with. Now let's see what are the first steps you need to take to invest this first $1,000 of money in stock market. So your first step to invest in stock market is opening a investment and trading account. In any countries, the procedure is the same. You can find a decent stockbroker, but I will do another video to explain which stockbrokers I use and to compare them. In order to invest your first $1,000 of saving, you don't need to be an expert. Any normal or average person can do it. And remember, your first goal is to learn how you invest your money safely in stock market. Even if you lose your whole $1,000 in this learning experiment, you're not going to be bankrupt, or you're going to be broke with this. You're not going to be stuck with this for your whole life. The point I'm making is wealthy people, if you look at any wealthy individual, they have investment in stock market and in stock trading. And this is the most proven method of investing your money effectively. So your first strategy in stock market trading is learn more than earn. So now let's see how we invest this first $1,000 in stock market. Number one, invest in what you already know. It's a very common and very easy approach of investment in stock market, that invest in companies that you already know. There is a lot of companies around the world which is proven already, or which is growing in a fast rate, and people already have enthusiasm in some field, in some industries. but we may not be started investing in those companies. For example, most people around the world use Apple products now, Apple iPhone, iPad, but many of them or most of them never invested in Apple company. Similarly, Coca-Cola, Tesla, Microsoft, Johnson & Johnson, those companies, lots of these kind of companies are successfully operating around the world. And some of these companies we already heard of, or some of these companies we already know very well. We use a lot of products in our day-to-day life. A lot of these products we use are good quality, and we probably more than happy to use these products of those companies. The interesting thing is all this information come under the market analysis. You can choose some of these companies who produce a good quality product. For example, Apple. Everyone knows about Apple products. You can go to Apple website, you can go to investor relations, and you can find out what are the future plans, how many products are in pipeline, or what is the future outlook of the company, how much profit company makes. You can easily find out this information nowadays in company websites or some other sources in internet. I'm not saying you need to go and buy Apple first, but Apple is one of the successful company who produce a lot of values for investors, and they still operate very profitably, and they have a good product pipeline, good innovation, good technology. You can choose this kind of blue chip companies first to invest, and you can learn from there, which I think is a very safe strategy to start with. Your knowledge and your experience is also a matter in choosing the companies, and which will help to identify a successful companies. For example, a person working in a bank can understand or have information about successfully operating banks around the world. Likewise, a medical professional, a doctor or a nurse can understand or can identify successful companies who operates in medical field. So firstly, go for companies which you can understand easily and which is related to your profession or related to your passion, enthusiasm, or whichever it is. Or even if you're a housewife, you can understand good products which is used in household, like shampoos, cleaning products, toothpaste, even soaps, those kind of stuff, the detergents, cleaning products. A lot of quality product a housewife can understand easily and identify companies who make these good products. Only thing they don't do or they don't try to understand is how invest in those kind of good companies. So as a first step, instead of reading a lot of articles or a lot of magazines, you can make use of your knowledge, your experience, and information within your hand. Number 2 is focus less than 5 stock. As a general rule, you should focus on less than 5 stocks initially to learn it better, to understand it better. You're going to make mistakes anyway for the first few trades or first 2 investments, and you have to learn the process, you have to understand it. So it is very easy to learn and understand first few stocks if it's less than 5. Number 3 is don't spend weeks researching your first stock. If you even apply the first 2 principles, you should be able to identify a good company. And if in case you cannot find out any companies, you can invest in blue chip companies. Blue chip companies are companies which are very stable in financially and operationally. So these fundamentally very strong companies you can find out in anywhere. If you search fundamentally strong blue chip stocks to invest in the Google search, you can get a list of companies. These companies will be the leader in that particular industry. For example, Google is a market leader in internet. So these companies' track record will be perfect, and profitability, their operations, everything perfect and more progressing, and they're creating more value for investors. You cannot go wrong with these kind of companies, and these companies are called blue chip companies. For example, Facebook is a company, a market leader in social media. So please do not spend a lot of time researching the first company you invest. You go and find out a blue chip company or invest in a company you already know. And even if in the worst case scenario, you're not going to lose your life by losing $1,000 or less than that amount. The chance of you losing this €1,000 investing in a blue chip company is nearly impossible. Number 4, separate your savings and investments. So the money you invest, especially the money you invest in stock market, should be separated from your savings for something. What you need to understand is, even if your money is reduced to 50% tomorrow, you shouldn't be affected by this, and you shouldn't be bothered by this. You should be able to keep your money in that investment for a longer period of time. So it is really important to separate your saving and your investment. Investments always do better, or investments do wealth creations better in longer term. Money you invested, you should be able to you should be not making a big deal about it if the money reduced into half next day or next week or in the near term, and you should be able to keep this money for a longer term. One thing you have to understand is, stock market can go down instantly within a very short span, but it can come back and it will compound in a reasonable time. Compounding is the wonder that creates you a lot of wealth. This is the same compounding Albert Einstein's indicated as the 8th wonder of the world. If you have a learning ability and if you have a patience, you can easily achieve this 8th wonder of the world, and you can make advantage and you can create wealth with your investments. Number 5, stay away from penny stocks. Penny stocks are the stocks which are trading very low price, and you can get a lot of stocks in a very small amount. Most penny stock trade less than $5 or even less than $1 stock. Most beginners in stock market think this is a good opportunity to buy, but they all often mistaken. Penny stocks can go down drastically, and sometimes this company can disappear, and there is a possibility that you can lose all of your money invested in penny stocks. When you have a lot of expertise and when you learn the process, you can go for penny stock, but as a starter and beginner, you should avoid investing in penny stocks. Number 6, and the last thing you should do with your first investment is do not expect extraordinary returns from the first investment. Your goal as you invest your first $1,000 is to learn the process, to achieve financial knowledge, and to learn how you safely invest in stock market and compound your money as you invested and create more wealth. You only able to compound in a significant way and increase your wealth only by investing more money, big amounts into that investment. That will certainly follow as you go along and you invest more money into the stock market. So you will get the effect of compounding and compounding wealth creation when you invest a significant amount of money and hold it for a longer term. Please give it a like for YouTube algorithm, and please subscribe. We'll see you in another video with more investment tips. Thanks for watching and stay tuned.